Hello. We are going to work on question E6-14, page 197 in the textbook, and this is an e-tutorial to solve this question. So the question is here at the top of the screen. This whole section here makes up the question, and we'll just maybe highlight that in some light green. I will read the question. Before the following financial statement was released, it was discovered that the current net realizable value of ending inventory was $96,000. So they're talking about this partial income statement right here at the bottom. And they're saying that the net realizable value of the ending inventory was $96,000. There's 3 steps to this question. The first step is to journalize the entry to apply the lower of cost and net realizable value to the inventories on August 31st, 2020. Second part is prepare a revised income statement to apply the lower of cost and net realizable value to the Wire Solutions Company's inventory. And then it's asking, what is the inventory balance that would be reported on Wire Solutions' balance sheet, and how would it be reported? So let's start with the 2 pieces of information that we need to do with requirement number 1. So requirement number 1 is asking us to journalize the entry using the lower of cost and net realizable value rule to the inventory. So the question tells us right here that the net realizable value of the inventory is $96,000, and in the income statement, the ending inventory is $105,700. So we need to do a journal entry to reduce the cost of our ending inventory from $105,700 to this $96,000. So just going to get rid of those so we can keep this nice and tidy. First, let's calculate what our journal entry dollar amount is going to be. So we know that the ending inventory is $105,700. We know that the net realizable value is $96,000. The difference between those 2 amounts is $9,700. So we know our journal entry has to be $9,700. So I'm just going to scroll down a little bit, and I've got a little template here from a journal entry. The journal entry takes place on August 31st, 2020. And our debit is the cost of goods sold for $9,700. And our credit is inventory for $9,700. And basically what that's doing is writing down the ending inventory to $96,000. This is a concept in Chapter 6 whereby if the value of the inventory is less than what you have it on in your ledger, you write it down to the lower of cost or net realizable value. And the net realizable value of this inventory at this point in time, as in the question, it says $96,000. So that's our journal entry. That's requirement number 1 complete. Requirement number 2 is prepare a revised income statement to apply the lower of cost and net realizable value to the Wire Solution Company's inventory. So all I'm going to do here for simplicity is I'm going to take the existing partial income statement that they gave us in the question. I'm just going to copy it down here to my section requirement 2. So there is it's just a copy. It's exactly what we saw above. I'm going to get rid of the color just to make it a bit clearer. So there it is. Now the question tells us, and per the journal entry we did in requirement number 1, that the ending inventory is $96,000. So I'm going to change the ending inventory to $96,000, which is the net realizable value. When I do that, you notice that my cost of goods sold has changed, because now you're taking 325 less the ending in 325,700 minus 96,000 to give me my cost of goods sold of $229,700. And my gross margin has also changed because my gross margin is the calculation of $320,000 minus my cost of goods sold of $229,700 to give me $90,300. So this is completion of requirement number 2. I've adjusted or changed my ending inventory to the net realizable value, and as a result, my cost of goods sold has changed, and so has my gross margin. So that's completion of requirement number 2. And then the final requirement in the question is, what is the inventory balance that would be reported on Wire Solutions Company's balance sheet, and how would it be reported? So we know that the inventory is $96,000. We're told that in the question. Requirement number 3 is basically asking you to tell them what would be reported on the balance sheet. Well, the inventory on the balance sheet would simply be $96,000, the same as our ending inventory up here on our income statement. The additional requirement when you're reporting ending inventory and you're writing it down is that in the notes to the financial statement, there is a note that says inventory is reported at the lower of cost or net realizable value of $96,000, and then you would report the cost, and it was 700. So there would be a note to the financial statements related to the inventory to advise that the inventory has been written down. And so that's requirement number 3 when you're talking about the balance sheet of what would be the balance of the inventory. And you would also need to make a note to those financial statements that the inventory has been written down. That is the completion of question E614. Journal entry is requirement number 1 to write down your inventory. Requirement number 2 is the adjusted income statement, and requirement number 3 relates to the balance sheet with your note to that financial statement.